Hi, my name is Mike Patton. I am the co-founder of Funder Trading, and today I wanted to make a video that's aimed at people who are my age or older. And I was born in 1976, so that means I am still in the nice old Gen X generation. Of course, you can never change what generation you're from, but I'm at the tail end of Gen X. And I want to make this video for Gen Xers and older, especially for you guys and gals who are baby boomers. I also want to make sure I address this to you as well. Now, a lot of you are not familiar with proprietary trading or prop trading, but I want to let you know that this is the fastest growing segment of the industry. And by the way, this is not a professionally recorded video. I'm just recording this right off of my camera, ad lib. So if I have any stutters or anything like that, I hope you understand. But I want to speak to you one to one, heart to heart, just to get the point across to you of what this involves. Okay, so hopefully you understand. Now, that being said, most of you are not familiar with prop trading. You probably heard of it, and it is the fastest growing sector of the financial market, at least in terms of what retail traders are doing. So, what's a retail trader? A retail trader is someone who opens a trading account with their own money they've saved up, and then they start trading stocks or options or futures or Forex or whatever you want to trade. And the key is that the retail trader risks only their own money. And the only thing that limits what they're allowed to do is what their brokerage allows them to do. Now, if you're trading stocks or options, you know that there are some restrictions, some limitations that usually come with that sort of account. In other words, for options, you have certain levels of clearance of what type of option strategies you're allowed to trade. For stocks, you may be limited based upon your experience on what you can do, whether you can go long or short, uh, or whether you can get a margin account, things like that. So there usually are some limitations out there for most markets, and most of you are used to that. But those limitations are fairly small, and it just comes down to whatever money that you put into your retail account. That is money that you can actually lose in its entirety, and no one's going to stop you until you get to the point where you are almost running out of money. Then your brokerage firm is going to cut off the trades, close them out, and basically make sure you don't lose any more money than is in your account. Now, when you're trading professionally, it's different. Professionals trade other people's money. They trade the money that's invested into their mutual fund or into their hedge fund, or they trade money provided by the partners at a proprietary trading firm. And that brings us to that topic. What does the prop trader do? What is a proprietary trading firm? Well, the proprietary trading firm was created for the purpose of allowing skilled traders to be able to execute trades for the purpose of generating profits, not just for the purpose of executing orders from clients. So, in other words, if the client says, I need to buy 10,000 shares of stock, and the trader says, okay, you've bought 10,000 shares of stock, that's just an order executing trader. Now, I'm not saying that job is necessarily as easy as it sounds, because executing trades is actually a job that requires skill when you're dealing with very large amounts of money. However, the difference is with a proprietary trader, you're expected to speculate, you're expected to make decisions and take risk with the intention of generating a gain that exceeds the amounts of risk that you were taking. In other words, if I'm risking $1, I should be able to make more than $1 in results, in profits from my trades if I'm going to be a successful proprietary trader or a successful trader in general. So a prop trader is going to trade money that's provided by the company. The company's assets are owned by the partners of the company, so they pool their resources into a general fund, and the prop trader is able to access those resources to trade through a account that's provided to them by the prop firm. They're going to trade with the software, the trading software that's also provided by the prop firm. And the prop firm is going to be monitoring every single thing they do in terms of their trading. So, in other words, the prop firm is not going to let you do anything you want. They're going to put some limitations on what type of trades you're allowed to do, how large your positions can be, how long you can keep them on, what amount of dollars you can lose per day, per week, per trade, per quarter. They're going to place some limitations on you to make sure that you're not taking excessive risk. Now, why do they do that? Because they have the data to show that people who follow the rules that they give them and then use effective strategies are the ones able to make consistent profits over time. It works similar to how an insurance company would work. a insurance company doesn't let the person getting the policy decide how much they're going to pay or just listen to other people's opinions. The insurance company is going to look at data. They're going to look at the stats and say, okay, well, if you're a 16-year-old male driving a red 1,000 horsepower car, there's a high probability you're going to get into a crash sometime soon. But if you are a 90-year-old grandmother who's driving in a rural area, barely drives at all, and she's driving an old, safe car, most likely she's not going to be much of a risk to you. So you would charge the grandmother a lower insurance premium than you would the younger man who's driving the much more dangerous car, who also, being younger and being male, has a much higher probability of getting into an accident. So what we're dealing with here is limitations based on data, based on actual numbers. All proprietary trading firms are gleaning data from the many generations of traders that have come and gone. All the data from brokerage firms, fund managers, etc. They're looking at all this information to help them figure out what type of risk they should allow each trader to take. So prop trading is not going to be exactly like trading a retail account. Two reasons, again, because you're trading someone else's money, number one, and number two, there will be restrictions on what you're allowed to do. But if you can work within those parameters, and you can with training in the right setup, the right company, then this allows you to potentially make a lot more money. So let's talk about that. What is the reason why anyone should become a prop trader? Well, if you are from my generation or older, I'm Gen X again, and if you're Gen X or older, you probably basically grew up in an environment where it's like, have some grit, work hard, do what you got to do. You have to make it for yourself. You can't depend on other people. We tend to have more of that mentality. And the older you get, the more you are like that, most likely. Now, while that is a good thing, and that has helped us to build our society, our world, it also has some limitations. And one of the limitations is you can't always do it all by yourself. And if you're getting into trading, if you want to be able to make money in the markets, there's probably a reason you got interested. Maybe it's because you're looking at your income, you're getting close to retirement, you're expecting things to be a lot better than what they are. You're looking at the money you're going to get from Social Security. Maybe you're even worried if you're going to get Social Security, if it's going to be solvent, which is actually a real serious concern, I have to say. So maybe you're worried about that, or maybe you're looking at the increased cost of living that you weren't expecting. You're looking at the bills that you've paid for your grandkids or your kids, where it's low, it's racked up more expense than you were expecting because their cost of living is a lot higher than what you remember when you were younger. I mean, let's face it. I mean, home prices, etc. Every time I look at prices these days, I'm amazed at how much more expensive things have become just compared to only 20 years ago or 15 years ago. So for those of us who are older, we've seen this happen. And we probably have been thinking about things in terms of, I got to do it all myself. But what prop trading allows you to do is to take a much smaller amount of capital and be able to leverage it to get a much higher amount of leverage and opportunity for trading the markets. Let me give you an example. Let's say that you have $2,000 that you want to commit into the markets and you want to start trading. Well, with $2,000, you can't really do that much. Sure, you can open an account, but how much money could you possibly expect to make from $2,000? Now, this is where the very clever marketers out there online in social media, on YouTube, etc., they're really smart. They know that most people don't have a ton of money they can really speculate with, and they trade in trading stocks or options or anything else. So what they do is they sell you an idea. They say, hey, we've got this system that's so good, this trading approach is so powerful that you can take a really small amount of money and turn it into a lot. You can turn $2,000 into $50,000, $100,000. And you know what? These people sell and sell and sell a lot of people. They get a lot of people to invest. They get a lot of people to buy what they're selling. And unfortunately, these people overwhelmingly find out that they spent money for something that can't possibly return the amount that they were expecting. In fact, it usually doesn't return much at all, if it even returns anything. So imagine you took that $2,000 that you were going to put into the markets and you put it into, let's say you bought some sort of trading course or something like that, where a person promised you They have this great strategy where you can take only a few $100s and you can turn it into a lot more. They're telling you if you buy this program for $2,000 and you put $200 into the Forex markets or something like that, this will be able to pay for itself in a matter of months. It sounds great because you're saying, oh, all I have to do is come up with another 200 bucks past my 2,000 to put into my trading account. Everything will be fine. But of course, we all have been through this. The reality is that's not usually the way it works. In fact, most of us know that most people are running out of money long before they actually figure out how to make successful trades. And even when they do, if they have very little capital, those successful trades don't make much of a difference. For example, it's generally considered for very good for a person to generate, let's say, a 20 or 30% return in a year. But if you think about it, a 20 or 30% return on $2,000 is not a lot. Even if you're doing it with $10,000, it's still not a lot. Is it something that you would rather have than not have? Sure. But let's be honest, a few $100s to maybe a few $1,000s in a year for most of us is not going to make or break us at this time, this age. But if it is, then it's even more important that you think about prop trading. So let's talk about prop trading. Prop trading, you take $2,000 to get access into a program. What this program allows you to do is to demonstrate that you can trade or you can learn how to trade. Now, of course, it's going to give you parameters that you have to stay within, but resources for some prop firms like Funder, we actually provide resources to help you to trade more successfully, whereas the vast majority of retail prop firms do not. So professional prop firms, you have to be very educated, you have to be young, you have to have very high grades, you have to have a very certain mentality, and like I said, very few people get into that. But retail is wide open. There are tons and tons of firms out there, thousands of them, that will let you give them money with the promise that if you do successful trading strategies with them, they're going to pay you out of the results of what you do. Now, with a prop firm, if I take $2,000 and I buy into a prop firm program, if I'm successful, the amount of money that I'll have available to trade with will be vastly larger than what I put in. So in other words, if I put $2,000 into a program, but when I get to the end, I have $250,000 of buying power. Buying power just means the amount of money you can deploy into markets. If I have that available to me at the end of that program, let's say it takes a year for me to complete it. At the end of that year, my $2,000 I paid in has given me access to $250,000 that I can now trade with. Now, let's face it, when you have $250,000 to trade with, being able to make $2,000, $5,000, $10,000 is vastly easier than it would be if you have only $2,000. Okay, that is just a fact. Okay, so the point is, that's the power of prop trading. It's allowing you to take money that you would have put into the markets, or maybe you would have paid into education, and instead putting it into a program where if you learn how to trade or you can demonstrate that you already know how, you have the potential to get a lot more money at your disposal. But you might be thinking, well, what if I fail? What if I don't meet the requirements? Good question. This is the thing that you also want to keep in mind. If you put $2,000 or any money into the markets, there is no guarantee that you get that money back. There's no program that you can buy that's actually going to be able to truly guarantee your success. The reality is, even if a program or strategy is really good, it's still going to come down to you as a trader to execute it correctly. So the point is, no matter what you do, if you put $2,000 into a trading account for yourself and you start to trade it, you know that even if you do really good, you're not going to be able to make a lot of money. If you get really lucky, you might, but then you have to repeat that process again. And let's face it, being lucky is not something you want to base your career on, your future on. So if I have a streak of luck and I turn $2,000 into $20,000, that's great. But now I have to keep going. And if I'm just waiting for the next lucky moment, then that's not really making progress. That's not really getting me any money on a regular basis. That would be like betting my career or my retirement on lottery tickets. Yes, it's possible I might be able to pull it off, but is it very likely? So when it comes down to trading, right, if I'm putting money into the markets and I already know how to trade, someone might say, well, why can't the prop firm just look at my statements? Well, the reality is, number one, the prop firm doesn't even know if they are your statements, and they don't even know if that's your only account. In other words, what if you have 10 accounts, you send me one that looks good, and you hide the others that didn't look so good. Doesn't help me. So, in the real world of professional trading, for someone to be able to be hired based on their track record, they have to have a verifiable track record, something that's audited, something that comes from a reliable source. So, if you're employed at another a trading firm, the stats of what you did at the previous firm could be used, but usually they don't let you. And that's one of the ways the prop trading industry and the professional trading industry, they tend to be very reluctant to let you take your stats anywhere else. That's their way of keeping you from leaving if you're a really good trader. Now, hedge funds usually have more transparency so people can see a lot more of what they're doing. And therefore, most people would know if a person's a successful manager and they would be able to take them to it. They could take their career to another place. But unless you can somehow validate going back for 5, 6, 10 years that you have a very solid track record of trading, then there's no possible way you're getting into a professional firm, which is what you want to do if you had that. So if you are one of these people, if you have a really great track record, funder trading is not going to be the place for you. What you want to do is start shopping your resume around to professional prop firms and see what they say. But just to warn you, even when you do that, because I've done it before. It's not as easy as you think. Just because you're making a profit doesn't mean that they're interested in you. It has to be very spectacular performance to get you in. So what the retail side allows you to do is to have less spectacular performance, but still be able to get access to being able to trade as a proprietary trader. So in summary, a prop trader is going to trade on behalf of someone else. They're going to take money to pay. If you're doing the retail type of prop trading, you're going to take money to pay to get into a program. The program is there specifically to allow you to demonstrate that you can trade. And as I always say to someone, if you really are good at trading and you're telling me that you have this great performance, then by no means should you have any problems joining our program, because you're going to know all the rules up front. You're going to know all the parameters you have to meet. And if you know you can work within those, then go ahead and join. And if you're not sure that you can trade successfully, but you want to, also join, because this is the way you learn how to trade professionally. You're going to be following professional rules, getting professional guidance, and that is going to help you to become a truly much better trader. So that is what prop trading is. And if you're interested in that, please go ahead and click the link at the bottom of this video to learn more. One of our people will give you a call. They'll go over exactly how the programs work, and I'll tell you up front that there is a cost, but the cost is not going to be very unreasonable. It's the amount you could put into a small trading account to get started. So go ahead and click that link below, set up your discovery call, and we'll see you on the other side. Take care.